What's up, guys? Mikkel here, and today we're doing the first installment of State of the Markets with Mikkel. Make sure if you like this content, you subscribe, like the video, and comment for what else you want to see going forward. So let's jump right into it, and as you can see right here on the screen, this is the Fear and Greed Index for the stock market, and it shows you the general emotion going on in the market we're currently experiencing. As you can see, currently we have a ranking of 25, which is considered extreme fear. I like to use this index a lot because it gives me a general idea of the emotion going on in the market. When I see extreme fear and anywhere in the red, I really like to consider to start buying stocks because usually it's typically a good time to get some deals. Now, I think it's important to note that not every single stock in the stock market is currently at this extreme fear region. Especially in this case, it seems that only some are hovering around there. I think as long as it stays this way, we don't see this drop much lower. But if more stocks start to go down, we could see this start heading down to the lower teens. I think this is important to pay attention to because this gives us a general indication of what we should be buying and where should we be focusing our attention. Because we're not at the lower levels of extreme fear, I'm going to be holding a position of cash, but instead of building that position of cash, I'm going to be slowly investing the money that I would add to that cash pile into the market. I'm going to leave my cash pile as a backstop reserve in case we do get to these lower levels. I generally don't like to time the market, so that's why I'm not going to be waiting and saving my cash for one big crash. I'm going to slowly build my funds and then use the money I'm making that I don't need to increase my cash level anymore to slowly average into the market. If there is a big drop, I'll start decreasing my cash position and start putting that into the stock market. When the crash is done and we start rallying, I'll build up my cash position again, and once I have that to where I want it, I'll start averaging back into the market again with my extra money. The reason why we're focusing on the stock market in this episode of State of the Market rather than the crypto market is because we look at the Fear Greed Index in the crypto market, we're actually at a 76, which is extreme greed. For this reason, I'm not really looking to average too much into crypto right now. I'm mostly focusing on stocks. One of the reasons I like to play both these markets at the same time is because it lets you kind of focus your attention somewhere. Like I said earlier, I don't like to time the markets, so I like to have a cash position, and with my extra money on top, I like to average into one of these two markets. These indicators let me pick which one I want to be averaging into. There's always good deals in either market, even if this Fear Greed Index, the Fear Greed Index doesn't always tell the whole story, but it gives us a good idea at where generally the better deals are. So while I might be making some small purchases in the crypto side, most of my attention for the coming weeks and months will be focused on stocks, and that's mostly because of the deals I'm currently seeing emerging. So let's jump into it. And at first, I want to point out that not all stocks are in this extreme fear category. If we look at something like a Nasdaq, the Nasdaq, while looking like it's kind of running out of steam here, it's certainly not in any state of extreme fear. The last time I saw the Nasdaq, the last time the Nasdaq was in more fears territories was obviously back in March, and then in some of these smaller drops back here. We're clearly not in any of those states right now, and while that could be coming around the corner, that's not where the current fear is being seen. The current fear is being seen in companies like ARK that are down pretty heavily since the highs. You have a lot of bear sentiment around companies like ARK right now, and you even have people like Michael Burry coming out and saying that he's short the ARK Innovation company. I personally think that ARK has a ton of potential going forward, so the more it dips, the more opportunity I see in the stock itself. I think we're already, as we can see by the Fear and Greed Index, we are already at a place of pretty significant fear. We can see that all the fear in the market probably isn't focused around the big companies, but more of the retail, more innovative stocks we see in ARK. This kind of makes me think that if the Fear and Greed Index would go lower, it would be driven by the Nasdaq itself and not necessarily the more retail-oriented stocks. I think this is important to watch because while the retail-oriented stocks will get hit more, we're already seeing decent deals in the sector, so that's why I don't think it's bad to start averaging in. If we go to here, this is Yardini Research, and this is a website that financial education calls out often, and we can see that this is the PE ratios for different sectors of the market: large cap, mid cap, and small cap. We can see that the large cap stocks have really been staying pretty neutral in where their PE ratio is at over the last couple of months. On the other side, mid caps and small caps have had drastic swings in the valuation of the PE ratio. I think this is a really important chart to look at, because typically if you look at all the movements up and down throughout history, every single one of these tend to follow each other to a general degree. Because of this, I think the current deviation going on with small caps, mid caps, and large caps will soon play itself out, and we'll see one of two things. One thing I would expect to see is we see the Nasdaq drop and more fear come into the fear and greed index, and you see it go to a place kind of similar to what ARK is doing. I think this would cause a lot more fear, and overall I think it'd bring down all stocks quite a bit. This is where I'd begin breaking into my cash reserves that I have saved. The other scenario is that these mid cap and small caps catch up to where the large caps are and pull themselves back into that same kind of flat trading range. If this was the case, I think we see the Nasdaq keep rallying, fear come out of the market, and we see ARK kind of break up to new highs to kind of similar to where the Nasdaq is trading. This is why I never try to time the market, because I think both scenarios are equally as probable, and that's why I have a cash position ready for if the large caps come down, but I'm also averaging in with my other money in case the mid caps and small caps continue to rise back up. So I'm essentially playing both sides, and I'm ready for either scenario. This is the best way to play the market, because you're never caught scared or fearful when either of these scenarios might happen. Now we're just going to click through some stocks I'm watching, see how they're reacting, and get my general opinion on when I'm looking to buy more, if I'm looking to buy now, or what else is going on. Here's Apple stock right now. I think this would go into the Nasdaq category. It's at all-time highs. It could continue to break out. Probably good stock to own and buy. It's not something I'm overly interested in right now, just because I don't think the deal's necessarily there, and I'm looking to kind of get into some newer, smaller companies where the stock price growth could be more explosive over the next 5 to 10 years. That being said, Apple's probably a great position to have as the core of your portfolio. It's just not something I'm focused on right now. The same thing is true for Nvidia. It's also at all-time highs, and I don't think this is where any of the fear in the market is currently at. If anything, I think there's a little bit of a flight to safety or euphoria around these large caps, because while illnesses come back, I think this is an easy way to hide from any volatility associated with them. On the other hand, that's just because they're going up right now, it doesn't mean that that's where the best place to be putting your money is now. In my opinion, there's a lot better deals in other companies that could set you up in the future for better gains ahead. A lot of these companies we'll jump into now, and they also happen to be massive plays in ARK itself. Palantir is one I'm looking at. While not down massively from its all-time highs, only 37%, I think this stock has been in a pretty significant trading range for the last couple months. I've already been building a position and slowly averaging in over this entire period, but I'm really waiting to see a massive breakdown before I significantly add to my position. If this was to break down to the $15 range, that's where I'd really be adding aggressively, because I don't think it will go down for much longer after it kind of breaks this trading range. I think Palantir makes all-time highs in the next 1, 2, 3 years, so the lower it goes, the happier I am to buy more. Next, we got Teledoc, which is really the same position. Teledoc's down pretty massively since its all-time highs, and I was adding probably around the 170-ish range all the way till now. I'm down on my position currently, and I could be down a lot more if this was to break down to the $100 range. Just like Palantir, I'm not going to be adding much until I see a massive break. I'll continue to use my cash pile that I'm adding on top to average into some of these positions, but my main cash position will stay untouched unless we see this break down. That being said, this could easily break back up and continue to make all-time highs. Also, I think the illness might be a tailwind for this company, as people might go back to more remote healthcare options. In the end, I think this company succeeds, and in 5 to 10 years is probably much higher than it is now. The healthcare industry is relatively undisrupted, and I think this company has a good chance to leave a significant mark on the healthcare industry itself. Technology tends to disrupt all things, and we haven't really seen that in general healthcare. Overall, I think this company goes much higher in the years to come, and the lower it goes, I think is a better buying opportunity. Airbnb is a company that I could see having massive headwinds coming forward, and I talked about in another video, so make sure you check that out. With that being said, I really like Airbnb in the years to come, and would actually be very happy if we could see this come down. I think this could come all the way down to the $100 level, where I'd be adding aggressively. I'd be using my cash position to buy more, and while it's stuck in this trading range, I'm not really looking to buy more. That being said, all of these have been in trading ranges for the last couple months, and I'm not really interested in adding much to these positions right now. I really want to see some new prices before I get involved. Something like PENN stock, though, I am interested in adding some more. I haven't added PENN stock since all the way back here, and what I'm seeing right now play out is interesting. It's almost like a rounded bottom that I think could begin to flatten out before it makes its way back up. I really like PENN, and I think this company is much larger in the years to come. I currently have probably about 3/4 of my position built out, but I would kind of like to add those last couple shares to really finish out my position. I think this could be a very good buying opportunity, and we really are down massive since the all-time high. Companies like this, when they're already down 50%, they typically don't have much more to go. They could finish it off with a 60 to 70% retracement, but you're getting it at decent deals now, so you don't always want to get too picky. That's the reason why I never try to time the market, and when I have a massive drop like this, I see a decent buying opportunity and a good time to start averaging. I don't know how much lower this one can go. It could do, like I said with the other one, if the other ones drop, this will likely drop too, but it is getting pretty low. We have football season coming back, so I think this has some decent tailwinds behind it, and they actually tend to do decent with the illness coming back. So I'm not too worried about this one, and I kind of like where it is sitting right now to start adding. I haven't added this one in a while. That's why, even though this one also you could say has been in a similar trading range, I haven't bought it in a while I've been buying these. So I think I feel a little more comfortable getting some shares here, and then after I get those shares, I'll wait for another move to decide if I'm going to add more. Here's Unity stock, which very interestingly, while the others look a little more bearish, this one seems to be a little bit more in an uptrend. I added this one, I think, between $80 and $100, so I'm up probably about 15%. Oh wow, 40%. But I probably added some shares higher up, so probably more around the 20-ish% range. This one I would also be very interested in adding more at lower prices, but I'm not entirely sure if we're really going to see that. If ARK drops massive, this will probably come down too. I'm not really interested in adding more up here. Epic Games is IPOing sometime this year, and I kind of rather would add Epic Games than more Unity, but I do like my Unity position. They're just not necessarily my favorite company. If they did drop, though, I would be happy to pick up some more shares. I'm looking for this to be like a top 10 position in my portfolio, but maybe not a massive one, kind of like what I would like to make Airbnb or Palantir. We're going to keep going. This is Circle stock. It was one of my first videos. I will be doing an update video on Circle stock because it probably will be my first and worst video ever. For Circle stock, really goes to my whole SPAC, decision making right now. I'm not going to be buying any more Circle stock because I did get it a lot in this range. I got it at 980, got it here at 1026. I'm waiting to see this merge and then seeing what the stock does. Currently, we've been watching stocks drop off a cliff, so if this ripped down after the merge, I would be buying a lot more. I do love Circle as a company. I just don't think there's any rush here to be adding really fast. I want to build this into a very big position, but I want to do it slowly. I just don't see any reason to be buying massive amounts at $10 while we're watching these SPACs drop off a cliff as soon as they merge. I'll probably get a better deal later on, so I'm just going to sit on my hands for now and watch this one closely. On the other hand, and this is kind of what I'm talking about, this is a company like Markforged. I did buy this at $10, so I'm down about 20%. This is one I'd be pretty interested in adding more of. It just feels like it's dropping off a cliff right now, so I don't think I'm in a rush. I think this will probably do something where it comes down here, maybe to the 655 range, and quickly V-bottom up. The reason why I think that is because we see here's another SPAC that I've watched over the years. This one I don't really like at all. It's called XL Fleet, and this one after it merged came down to the $5 range and really found some resistance around there. This company has very little revenue compared to something like a Circle, which almost has 10 times their revenue. I think they did like 50 million. And this is an electric vehicle company with massive competition. Circle is a leader in their industry, so I mean I see a massive difference between the underlying business models. If XL Fleets could come down and hold this kind of $5 range, I think Circle could do a similar thing at the minimum. The market caps are very different between these two companies, but I mean, let's face it, a lot of these companies aren't trading on fundamentals anyway, so for me, I'm looking at the $5 range for them as well as something like a Markforged. That would be about the lowest I'd be willing to look on this, but I would start considering adding now. And with that being said, you have companies like ARK Invest currently starting to add pretty aggressively to their Markforged position. I think this will only continue to rise because Markforged, like I showed in one of my other videos, I think will be a leader in the 3D printing space. Overall, in terms of what I'm looking to buy the most right now, Markforged might be on the top of my list because we're starting to see some massive decreases in prices. I wouldn't be adding any massive amount of Markforged, but I still probably would be starting to average into these shares with some of that extra money that I talked about earlier in the video. The last thing I want to get into is Chinese stocks, and here I see a lot of risk, but I also see a lot of reward. I'm not too interested in any of the Chinese stocks, and I actually have 0 positions in any of them because I really don't like the way you can kind of see things just change on a dime in that country where the companies kind of have no say in some of the government imposed policy. With that being said, these are still very good companies, and I actually do like Tencent a lot. They're almost like a technology conglomerate, and I think kind of similar to Google. The stock's been being hammered and is down 43% since all-time highs, which is kind of similar to past massive drops we've seen in the past. The thing about China for me is I'm pretty surprised that you see a company like ARK selling all of its China stocks. If you didn't know, they're currently liquidating all of their Chinese stocks. Most of them are gone right now, but you can still see some late sells on this chart. Pretty much they're selling everything Chinese. For me, it seems like FUD like this happens all the time with Chinese stocks. This was a trade war. It gets hit, it bounces around, comes back up. For me, what I would be interested in seeing is seeing this come back down to this kind of trend level right here, bouncing around. And if it did make a bottom, I would consider starting a small position in Tencent. Until I saw kind of a bottoming, I'm really not interested in building this into a massive position. While I do see a lot of opportunity, because whenever something gets hammered like this, there's always a ton of opportunity. This is one like Circle where I would be interested in adding, but I just need to wait and see and sit back. In terms of more immediate adds, like I said, I'm looking to maybe start averaging into Markforged over the next couple of weeks, and I also would like to maybe start increasing my Palantir position. I could also do a little averaging into Unity because I didn't really build this position size I wanted down here, and I don't mind paying averaging in a couple shares here or there to slowly build out my position on that one. I just need to be ready for a drop, because if some of these drops, like I think they will, I think they'll be no exception and also get hit. Also, I have Epic Games coming in the end of the year, who will be IPOing, who is in a similar sector to Unity. I don't think they directly compete, but I don't want to build this position too big, because I also want to be saving money to build my Epic Game position, which is a position that I would like to build larger than my Unity position. Anyway, before this video gets long, thanks for tuning in to the first state of the markets with Mikkel. When the opportunity arises, we'll turn this into a crypto theme, and I'll give you a hint. That's when this crypto fear index will be towards red, and this will be towards green, and then we'll be averaging into crypto instead of stocks. And then while everyone's buying stocks at the top, we'll be averaging into crypto at the bottom. And in a couple months from then, we'll switch back. And that's kind of how, over the last couple months, I've really outperformed the market. I've constantly stayed buying, but I've been buying markets in the red rather than the green. Anyway, guys, thanks for tuning in. I hope you liked the video. Make sure you like, subscribe, and comment for more. And thanks for tuning in. See ya.